So what happens when you don't have homeowners insurance? You have a home, you don't have homeowners insurance, or your insurance got canceled, or you didn't pay, and the coverage has ended. 1 out of 8 United States homeowners don't have adequate homeowners insurance, or they don't even have it at all. For example, like 200% increase in the last 5 years in Florida, $6,000 a year homeowners insurance. It's really hard to afford that. By the way, welcome back to Shawn Realty Podcast. My name is Shawn Yu in Portland, Oregon. It says 1 in 8 US homeowners aren't protected by the homeowners insurance. I'll just give you the key points here. Across the country, 13.4% of homeowners, 1 in about 8, are unprotected by the homeowners insurance. It's more significant in the South. About 15.7% of the homeowners lack insurance entirely or pay so little the coverage really doesn't cover them. Not having insurance at all is just the worst case scenario, especially if you still have a mortgage, because when you sign the loan document, there's several pages that says the mortgage company can force purchase homeowners insurance if the homeowners don't have the insurance. And that can be very, very expensive, and your monthly the house cost will go up significantly because they force purchase the very expensive homeowners insurance. Let's just dive into one quick tip here. It's better to pay a high deductible to save some monthly premium than not paying enough or not having enough coverage. Let's say your home is worth $500,000. If you only have coverage up to $250,000, it's better than nothing, but that's not going to be adequate. And I'm not an insurance expert, but mortgage company could actually do an additional purchase to cover the $250,000. The compounding issue is that how much more expensive the homeowners insurance policies have become. So I had to follow that link, and in California, in today's premium, average annual home insurance premium is $1,300 as of today, which is up 16% compared to 2019 level. In Florida, it went up 200%. Now, average homeowners insurance in Florida is $6,000. That's like almost like $500 a month just for the homeowners insurance, which is it's another like property taxes, right? It says, and what happens? Catastrophe strikes the uninsured. It says it's very hard, if not impossible, to recover from hurricane, wildfires, tornadoes, and big three categories without proper home insurance. So you can recover from it, but it's going to be very hard. There's also an impact beyond the wall of a home. Insurance claim payments benefit not only those directly affected by loss. For example, the many claim payments ultimately go to local auto repair shop if your car is damaged, home improvement stores, assuming like roofing materials, siding materials, or whatever that might be, and the contractor and healthcare facility to fix cars, rebuild homes, and provide medical treatment. So those are some of the things that the homeowners insurance cover. So if you don't have that, you may not have enough coverage to actually do those things. I didn't think about the personal injuries, but that can go toward the medical bills as well. As I mentioned, it's better to have a high deductible to save the monthly payment, but you gotta have some kind of coverage continuously. And it's better to add that into the escrow so that you just pay one fee with the mortgage principal and interest, the property taxes, and homeowners insurance all combined so you don't forget. One of the things that I heard from the escrow officer the other day was that sometimes the property taxes or the insurance costs go up even more than the reserve that they have. In that case, they could actually start foreclosure process in the property tax department because you're not paying, let's say, like $100 less than the the most recent property tax. So it's important to check with your statement. Whenever you get the statement, make sure that your monthly payment is adequate to cover that raised property tax or the homeowner's insurance. Now, one insurance that I personally don't have in Oregon, which I might have to get at some point because we're expecting this big earthquake in the next 50 years. We're kind of rolling dice here because I know many homeowners don't have that earthquake protection homeowners insurance portion. My understanding is that it's anywhere between like $1,000 to $2,000 a year addition to your regular homeowners insurance. Something to think about for me too. And what I find is that the money saving tip wise, if you bundle your car insurance and home insurance combined, you might be able to save some money. And I believe that's what we do. We used to have like with the Costco, they tend to have, but now we had to move away from Costco because my kids' insurance cost is going up with the car. Let's talk about the winter storm. So it was last year, 2023. My neighborhood had probably about half a dozen trees fell down because of the high wind, like snow, hail, all combined. And one of my siding one side of the house siding fell down. About 7 to 10 different pieces just fell down. And main reason was that some of those sidings weren't nailed in correctly. So the panels were like flopping like this and then just fell down, right? So we had to call the insurance company and they came out and took pictures and we got compensated for. But if we didn't have the homeowner's insurance, it probably costed me a couple of $1,000s for sure. Nobody got hurt, so I didn't have to use toward the medical bills or anything like that. But that's the only homeowner's insurance claim that I personally dealt with. I want you to know, in Oregon, the high wind is an issue. The rain is an issue too. And when siding comes down, you want to fix it really fast so it doesn't get water damaged right after. So to kind of sum up, you gotta have the homeowner's insurance. And then when you buy a home, you might want to check with the seller, the agent, insurance agent, mortgage company to see what the current owner is paying for the homeowner's insurance right now. And that is a good indicator. Some areas in the Portland Metro too, where it requires a flood insurance. Now that's a whole other topic it may be, but if the current owner is paying flood insurance, that means there's a high chance that is required by the mortgage company. And sometimes mortgage company will find that out and they will force you to buy it. And so if that is, additional $1,500 a year, that's like close to $100 extra that you have to pay. And obviously if the seller knows about it, they need to disclose that. But a lot of times it falls onto buyer's due diligence. And so you need to consider that in. If you're close to a river, creek, they have the 100-year floodplain. So you have to do some research on that. Hopefully your buyer's agent can guide you where to look, who to call to verify the information, but it directly affects your monthly affordability when you buy a home. So when you're shopping for a home, make sure to look for that information, the mortgage insurance, property taxes, HOA, homeowner's insurance, flood insurance, earthquake insurance, wildfire insurance. You get the points, right? So make sure to add all those into your monthly budget when you're shopping for a home. If you hit the like button and subscribe, that's going to help my channel greatly. Thank you for your support. I wish you a great day.